partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida. It's nice enough to come on and talk about what's happening in the marketplace. So, Shawn, how you doing, man?
I'm doing really good, Casey. Super good.
Good deal. So, before we started recording, sat down and kind of talked about what we were going to do and thought about a few things. And I think probably the one thing, Shawn, that we should probably hit on because of the time of the year we're at and some of the stuff you've been talking about is planting season and what that weather pattern is looking like right now. So, pretty much it's happening kind of like you said, we're going to see a pretty good easy going planting season. We're seeing that now. We got good soil moisture maps and stuff out there showing good moisture in the soil in the Midwest. We're seeing some relatively dry conditions in the West, but we're seeing a lot of snowpack as well, Shawn. So I guess talk about what you've seen so far and if your models are holding up to what you thought they might be.
Yeah, I mean, good soil moisture. We're even starting to get some rains in the Southern Plains finally this coming week. Looks like we're going to get inches of rain finally, and even in West Texas. So even they're going to start getting there's every year, Casey, there's always an area, it's not going good there and all. But for the outside, like the Northern Plains, because of the flooding up there and some of the snow that's still there and the cold weather that they're a little delayed, that could be an issue and probably will be an issue for spring week, Casey. But everything else, if you look at the Maiden-Julian oscillation, which is called the MJO for short, there's different phases 1 through 8. Typically, right now we're in what's called the cold phase. It's phase 1, but we're going to be moving into phase 4, 5, and 6, which is hot, kind of a hot teleconnection as we get into mid-May. So even in the northern areas where they're having to slow, they're going to be able to rock and roll in mid-May and pretty much we can pretty much plant the whole crop if everybody wants to within 1 week, pretty much.
Sure.
I mean, there's some guys in Southern Illinois that are already fully done because they just got going and they just never stopped.
Yeah.
So I just do not believe outside of spring week that planting is going to be a driver of prices. And it almost never really is. Even 2019, which was one of the worst, rainiest, delayed planting seasons we've ever had. You had to go back to 1993, anything like it. And they still didn't react the market to the upside until we got into June, when you needed to be delayed into mid-June before the market actually gave a hoot about it. So if you're looking for a rally on planting, it's not going to happen, and it shouldn't happen. It's interesting, we've talked about the analog to 2012 because 2012 was a transition year from La Nina to El Nino. Everyone was expecting El Nino that year. Everyone was expecting cool, wet weather that year. We had negative Pacific decadal oscillation like we have today, which is cold, sea surface temperatures off the coast of California. We had that big warm blob in the North Central Pacific. We had the warm water on the East Pacific, but we didn't have El Nino in the center. It's exactly what we have today. And if you look at the subsoil moisture maps in April, almost the entire Midwest had great subsoil moisture. Even into May, 85% had great subsoil moisture. And then June, boom, all of a sudden these reds and blacks started coming. And then July, blacks in Iowa, blacks in Illinois. We have not seen a drought in that Iowa, Illinois, Indiana corridor since 2012. But that's how quickly things can change when you have this type of sea surface temperature setup like we do today. So, I always equate it, just because I live here in South Florida, I always kind of view it as it's the calm before the storm. It's the eye of the hurricane, meaning that you're in this period of calm where everything looks great. Subsoil moisture looks great. Planting's going well. El Nino's coming, supposedly. I mean, everyone is just saying there's no hope, no future, and they're pounding the grain markets, as we see day in and day out, and they're going to continue to do that. If you look at the price analog for corn, for example, which I think is a very good price analog to watch. No 2 years are exactly the same, but a lot of times they rhyme. We made a hard low in corn in mid-May, bottomed into early June, and then as the dry weather patterns started to become more manifested to the market psychology, we started to really turn up in mid-June. And then from mid-June to the first week of August, we put $3 on the corn market in that short period of time. Now, obviously, that's not a forecast. We don't have that weather yet. What I'm saying is things can turn around really, really quickly. And just because you have a good start doesn't mean you're going to have a good crop. Just because you have a bad start doesn't mean you're going to have a good crop. Remember 2019, we had a terrible start. We had a pretty good crop. So if these teleconnections that we've been discussing, which is a kind of a later forming El Nino and this Pacific Decadal Oscillation remaining in place through the summer growing season, I do think the odds are favorable that we are going to get at least a drought weather scare in the central eastern rainbow. Now, it may not turn out to be 2012. I mean, that was a 1 in 50 year drought, and that was pretty extreme. Maybe it could be. But I'm just saying, I think in the least, we're going to get uncomfortably hot, dry weather in that central eastern grain belt, which we have not gotten in a long time. And we've learned in the last couple of years, unless you get that area in trouble, you're still going to have a pretty good corn crop and pretty good soybean crop. Yes, it could be off by a little, but not by a lot. I mean, we had drought all over the place, but that area was good. The 350 bushel corn came out, and it was not too bad. So that's the setup, and we're getting all the speculators getting bearish, starting to sell the market and get short, and everybody getting bearish, and farmers panic selling into the hole, which is all the kind of things you look for psychologically for the setup for kind of a significant reversion when everybody realizes they've just gotten on the wrong side of the boat as the boat's ready to go the other way. So I think if I'm thinking this through, a livestock producer, and we've been talking about this on your show for months, we've been writing about it for 9 months in our reports, that this April-May timeframe, this is a great time to be looking at bean meal feed, corn feed, for livestock producers, getting physical purchases bought into the end of the year, or protecting upside price risks. This is, I think, something really, really smart is coming up here on the buy side. We've had plenty of selling opportunities for farmers over the last, 12 to 18 months on the sell side, but this is a first really good buy side opportunity that's being offered since 2020. So that's what we see. We don't think we're quite there yet. We don't think we're totally at the moment of maximum pessimism, but we also don't think we're that far away either. We think mid-May looks, if we follow the 2012 analog, probably is a place to be really thinking about that kind of, doing that kind of thing as a livestock producer.
Right on. Okay. I always like going over the crop progress report highlights, because it's amazing how fast they change. Just like you talked about, they can go from a little bit to a whole bunch in just a weekend if you really, when they get going. So we're going to start seeing some things, see some things rolling and get some things moving here. And it's going to be that time of the year where, everyone's out running around with their, trying to get stuff done as fast as they can. So everyone just be safe when you're out there during planting season, because it's a lot of things happen, and a lot of things can be avoided by just taking time and slowing down a little bit. So, all right, Shawn, let's talk about.
Just remember, Casey, in 2019, we went. I'm just trying to remember exactly, but I think we went from something like, 35% planted in mid-June, like unheard of, to like 85% planted in like 1 week.
Yeah.
I mean, it was just like when it's time, they could, I mean, it used to be they couldn't do that, but when you have a planter that goes across the entire country, and you say go, it doesn't.
It's amazing how many they can get done. I mean, size
10-day window,
speed, everything,
and
amazing.
the job is done. A 10-day window, and even it may not even need that. So that's why I really focus on this warm mid-May that's coming. It's just we're gonna plant the whole thing. It's by the time you get to the end of May, it's just gonna be done outside of a few areas that, whatever, know. So
it's planter size, planter speed, technology that goes along
technology.
with it.
It's just amazing. Yeah, it's just that's why planting delays. Like I said, 2002 was your poster child for how bad a weather scare could be. I mean, a planting cycle could be, and they wait till mid-June before they move that market up.
Yeah,
and then everyone was then the whole prevent plant acre thing that the market got excited about, and the USDA said nah. Didn't happen, or they and the market collapsed, and then later on they said, oh yeah, we did actually have it. And it's just, if you're trading planting in the market in grains, it's just not a very good strategy, generally speaking.
It's a rough one.
So it's a rough strategy. Good luck. Good luck.
Yep, absolutely. All right, so since we're in the middle of planting season, things are rolling, looking at diesel prices and energy prices as a whole, you still look at natural gas prices, and they're still incredibly cheap for what comparatively to where they, the rest of the marketplace. You start looking at diesel prices, and you're seeing some diesel prices fall a little bit, but the price of oil is kind of bouncing around in that $80 mark, kind of back and forth here and there. So I guess, Shawn, looking at the energy market, what are your thoughts there?
Well, the OPEC, the Middle East, the cartel tried to goose the market up. It never works, by the way. If they're trying to move the market up in a accelerated recession, it never works. And so we had that big move from the low 70s to the mid 80s, and now we're rolling over. We're back, I don't know, 77, 78. It looks like we're going to head back down to the lows. You can't force the market up until the market feels that the recession is nearing its peak. We're not at the peak. The peak is still in front of us. Yeah. The Fed apparently is going to raise rates again here next week, 0.25%. And well, that's just not going to, even though the regional banking crisis has gotten really, really quiet, we don't hear anything anymore, and they kind of papered over some, they're not going to be in the business of lending money to anybody anytime soon. And without credit growth, there's not going to be strong economic growth in most businesses right now, because the regional banks drive small business. A small business drives 70% of the U.S. economy, and 70% of the small business drives 70% of the U.S. employment. So we're not there yet, Casey. And stocks can play fantasy land all they want about, 3 years from now the demand is going to be great, and so we're still going to buy whatever they're buying because we don't care, and they can get away with it because equities are they trade at a huge premium to asset value, and you can dream all you want, but cotton or corn have to live in the physical world. Today I have to move, find a buyer and a seller, and we can't divorce ourselves too much from what's going on the ground. We can for a little while, but not until we get close enough. We certainly in the least need the Federal Reserve to say we're done raising rates.
Yeah.
And they haven't said that yet. So until they say that, hard to get excited about anything right now, Casey, in terms of the economy. Hard. And we'll, it just looks like, that we're going to get the PCE, that hotshot inflation number that the Federal Reserve says they now is their preferred number of choice to make their decisions on April 28th. I don't know what it's going to say. If you ask 100 economists, they all get it wrong anyway.
Right.
So I don't know what it's going to say, but if it prints a higher number than the market's expecting, maybe it's a lower number. I don't know. Maybe that will finally get them to say we're not going to raise next week. But you know what? I want to have a bird in the hand with the Fed. I want them to actually say on TV in a press conference after their meeting, we're done. Until I see that, we have to assume that the economy is going to get worse before it gets better.
Yeah.
And as such, markets like crude oil, markets that are sensitive to the economy, like, are going to struggle, even if people like the Middle East are trying to hold supply back. It's not going to work.
Yep.
So
All
the
right.
good news for that is that energy is a lot cheaper, a heck of a lot cheaper than it was a year ago. And that's good news because that saves money for the farmer as he goes out and he runs that equipment. He doesn't have to spend as much. And of course, his prices are lower, but at least his energy bill is a lot less than it was a year ago.
Yep. So I'm just looking at this here in the early mornings. The natural gas was $2.19.5, down 7 and 8. So there's, you just look at that now. I mean, compared to where that was, well, this time last year, that was over $10. So I mean, it's just,
well, look at Europe. Europe actually and Asia actually had LNG prices trade between $80, 80 and 100.
wow.
Okay, I mean our MMBTUs, right? So R2 they actually trade for 80 to 100 summer fall of last year. They're now trading between 15 to 20. Now compared to our price, that's outrageous.
Right.
Compared to 100, they're like, we've seen the light. We've seen it. I mean, they are just cranking with, I mean, the business there are just, they are like in, they're passing the champagne bottles around because they can actually run their operations again. You know?
It's crazy. It's crazy how
unbelievable.
Just the overreaction to that, and then how fast it snapped back and how violently, because it's lower now than it was when it took off. So I mean, it's by a lot. So it's
parabolic rises tend to do that, generally speaking. And when you have a warm, short winter, obviously the most important factor to energy prices, at least natural gas prices, is heating demand during the winter. We really, really got bailed out on a short, warm winter, which was something we warned about. That this was not likely going to be the energy crisis. And it doesn't mean the energy crisis year is not coming.
Yeah.
It is, but you can't have a short, warm winter and get an energy crisis. I don't care how tight your supplies are. And look, when you all put something, thank God it happened. Thank God we had a warm, short winter, because if we had a normal or really bad winter, the consequences humanitarian wise, Casey, it would have been an apocalyptic event. So thank God that we kicked the can down the road at least a little while and gives more time for the market to figure something else out or find a different way. The longer you have time to think about something, even politicians, the more time you have to at least do a few things right. So time's on your side, but I'm just, it's very fortunate that we avoided what could have been one of those incredible monumental events in history had it occurred. So
right. Absolutely. Okay. All right. So you have a cold storage report out this afternoon. You've got cattle prices that are still just, powering through all the stuff. Cash hogs are kind of back and forth. You get one day of really good gains and you lose it all the next 3 days, and you get one day a gain type of deal. So I guess looking at the livestock markets, Shawn, what's your thoughts there?
It's just hard to believe that the pork demand domestically is as weak as the pork cutout is suggesting. It's just terrible. You would think there'd be more value buyers, and considering how high beef prices are, you just would think there'd be some better support for the market. I mean, if you just look it up, when we actually have pork cutout futures market now, and you can look at the price on a daily basis, futures wise, it's just a crash. It just shows you how tough the economy is becoming. Even more startling is how strong the beef price continues to be in a very, very poor economy. One would have expected the demand at such a high beef price to have backed off some, and it doesn't mean that it won't, but it's amazing how resilient the beef demand has been up to this point. Having said that, there comes a time where even the most stubborn markets eventually give way, and as the economy continues to get worse, I still don't believe that the beef demand is non-cyclical or non-economically sensitive. I still believe there's an economic component to it that's going to show itself here. And like we saw with the pork cutout price, where all of a sudden out of nowhere it just dropped like a stone, I think we're going to wake up one week and just see that the beef cutout price just collapsed out of nowhere. And on Friday we got the first bearish cattle on feed report we've seen in a very long time. Not so much that the cattle on feed, it was up maybe 1% above expectations, but the placements were up 4% above what the expected number was. And even though the market yesterday was down a little, but it didn't react too much. I mean, that's kind of like, the first warning shot across the bow that maybe, August prices are at marginal all-time highs here, that maybe the market has gotten a little ahead of itself on what's really going on. And if we string another cattle on feed report on the next one that's bearish again, I find it hard. I think the cattle market can dilute itself into dismissing one bearish report, but I don't think it can dismiss two of them. So I would really be thinking that, there's going to be a lot of nervousness about the next cattle on feed report, and whether or not that this was just a one-off bearish report, or it actually leads to some momentum, and we finally get that break in the cattle market that many have been expecting to see, and should eventually, in every bear market in commodities, there's always one or two markets that are the last to fall. And obviously cattle is one of those last ones to fall, but they always get around. They always circle the wagons and get to the last one to fall before the commodities turn back up again and start a new resurgence. So I have to believe before we make a low in commodities, sometime here later this spring, the cattle market's going to see, some kind of a speculative liquidation event. And by the way, they're very, very long, the cattle market right now. And I just don't see that they're going to be willing to stay in there all through the spring and not decide to take some chips off the table. I've been wrong a little bit on this market. It's been stronger than I've been expecting, but I'm still going to hold to that. And in terms of a producer, I don't care what you think the market's going to do. If you don't sell current prices heading into the summer, I just think you're asking for trouble. The prices are good. And I just think you need to take some money home on the farm. I just think it's the right thing to do. You have plenty of time to sell a higher price in the fall, and in 24 if they go much higher as we think they're going to. But boy, when you're given a gift horse like this, after what what they experienced the last couple of years with fires and COVID, I mean, I just think if you don't sell, you're just not thinking right, in my personal opinion. So
right on. Okay. All right, Shawn, good stuff as usual. Folks want to reach out to you and get more information about what's going on at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. Our Twitter page is @Faradix11. We have a LinkedIn page as well. We put interviews up there from time on market to market and other things that we do in different to kind of go over some of our cycles, some of our work, and some of our forecasts. And if people want to kind of, keep a general idea of what we're thinking, obviously your show and your Twitter page and your YouTube channel, that's places to keep tabs with us.
Right on. Right on, Shawn. I appreciate you being on the podcast, man.
Thanks, Casey. Always a blast.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC, LinkedIn at Moving Iron Podcast, and like Shawn talked about, over on the YouTube channel at Moving Iron Podcast. Check it out there. Go to MovingIronLLC.com for everything Moving Iron related and all the information for the Moving Iron Summit coming up here in Nashville, Tennessee, September 11th through the 13th. If you're interested in that, go to the website and you can register there. Or you can just send me an email at MovingIronPodcast@MovingIronPodcast.com, and I can direct you to the right place and get you signed up there as well. So if you're one of the first 150 people to sign up, you get a $50 discount from the folks over at Axon Tire, and they will take care of that for you. So with that, I'm Casey Seymour. We're Shawn Hackett. It's going to be some iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and